So nice to have you back, Peter. I'm ready anytime you are. Can you hear me?
Yes, Dale. Hello, it's Peter.
Hey, Peter. Happy New Year, Peter.
Thanks a lot. Yeah, same to you. How you doing?
So great to have you back. I appreciate you coming back to talk to us, Peter. And before we get started, I want to acknowledge and congratulate you on 2 real great calls that you made last time you were with us. You said there'd be one more low in gold to about 352, and that was close enough for government work, so we're about $30 above it, have even been higher. And you talked about that you didn't think there was a possibility the Dixie was topping out. We had that break. We haven't made new highs yet. And just, great calls. Good to have you here. And I hope 2016 is your best year ever in all ways, Peter.
Thanks a lot, Dale. Yeah, that's well, great. No, I really appreciate that. Well, you know how tough it is to sort of track the markets and get things right, and sometimes things just come together. I think there's a lot going to be happening this year, so I think from the people you look after and I look after from our side, we have an obligation to really, do as best we can for everybody. And I think there's going to be some exciting stuff this year. I think we have to be patient, like always. But I think if we are, we're going to see some exciting stuff. And that goes for, not just things that you cover specifically like FX, but particularly on the things that I'm looking at right now on the commodity front. I find that these are getting into some very interesting numbers.
Yeah, I wanted to bring that up with you. I put out a tweet, Peter. I said the most unexpected event would be that commodities would bail out the stock market, that they would rally and recover and come to the rescue of the S&Ps. Crude oil, I think, is close in my work. That's a market that we didn't cover. And also, I'd like your comment on the worst start in stock market history to a new year. And a lot of people say as January goes, so goes the market. To me, it looks like if we could just generate even a bear market rally in crude back to 34, then 38, maybe 42, that might support the market. And I've never heard more Wall Street analysts come out and say sell everything in the S&Ps at this early of a stage of a sell-off. So it makes it hard for me to want to do it, and plus I know from a tweet that we exchanged some information that at that time you still thought there was a possibility of one more high in the S&Ps before we went to your 1690 target. Is that still on track despite this sell-off?
Yeah, it is. I'm actually watching today closely because I think today's a reversal day on the S&P, and actually there's a 5-wave pattern down from the secondary highs that we had on the 30th of December. When everybody was sort of snugged between Christmas celebration and New Year. Right. That's when the S&P made that secondary top, and that was about 2075 on the futures, and we've got a very nice 5-wave declining sequence which finishes right now. And
what great timing for the interview. So, because I have guys like Harry Dent on, and they're saying you take out this 1880 level, it's a rounding top, head and shoulders top. The big bears are talking, that'll take it to 1600. I think the biggest surprise now would be cleaning out all the bears. I came into this year long volatility, and I actually covered last Friday, a little early before the last plunge on Friday. The VIX peaked, and that's something else. The VIX didn't act the way it should have acted on that decline. It almost took another 100-handle decline in the S&Ps for the VIX to attain the levels that it had 2 months ago.
Right, yeah. No, I'm actually very interested in the way that the markets are declining at the moment. One of the things which I picked up on last year was that a lot of our clients were starting to get interested in the small cap, the Russell 2000, and in 2015, when or in fact going back to sort of October 2014 was a low then, and it started to move up into 2015's peak.
The Ebola scare.
This is the Russell,
Yes.
yeah, but it
And
did
it's led
so.
all the way down. So, are you thinking that it may be the leader for this next move?
Well, it's been a huge underperformer relative to
Right.
the large caps. But during that advance from late 2014 into 2015, it unfolded into a very succinct three price swing event. In Elliott wave terms, we call that a zigzag. And it sort of pokes its head above the ceiling, the previous high in 2014, just marginally, not much. And when something like that happens, and then the decline occurs and it goes back below the previous sort of peak, this is part of what we call an expanding flat. It's a correction within a bull trend. But in this case, it's taking 18 months to fulfill its completion, and its final leg is to the downside, and it has to get down in order to complete that pattern. And it's just coming in towards the downside targets that we had last year now. So I'm intrigued to see if that's going to sort of put the brakes on, because if it does, we're going to have we're going to trigger a really big bullish signal for the remainder of this year, which comes back to your question about the January effect and the bearishness that some analysts are pushing out, which is unusual at this stage of declines.
Yeah, there were a few analysts on CNBC. One guy from Societe Generale talking about the S&P under 1,000, and I could see long-term bearish possibilities of that. I was thinking that there could be. You're talking about that we may be close to putting in a low for the year. Isn't it possible that we get a low here, rally to new highs, and then have the failure after we've cleaned out all the bears?
Well, that's it. Yeah, that's it. I think that if we go back to the slightly larger trends that are on the S&P developing up from the October 11 lows, that was the old low at 1074 at that time. We are due for a sort of in that time frame we are due for a top, because there's a big 5-wave advance from the October 11 lows which needs to complete. But I always thought that there was this chance of nudging into a slightly higher high, because when we measure up that advance from October 11, we had slightly higher numbers than what was achieved in May last year at 2134. So I thought we might squeeze up a little bit more, and that's why I'm fairly interested in the way that the Russell has underperformed, because it's now getting into sort of some targets which I had last year to complete the correction downwards before resuming up. And the S&P and the Dow and the Nasdaq, they're all still holding above the August lows, and I think that's the criteria now. If the S&P can put in a low even today, right now as we talk, and start to work its way back up, and we say goodbye to today's lows, we'll put in a secondary low today, and that would be quite bullish for probably another 6 months.
Okay, could take us into mid-year. Are you willing to do a screen share and let us take a look at some of the counts that you're talking about? Picture speaks 1,000 words. You go up to the green box with the arrow.
Let's try and do that. Is that the green arrow screen share? Yeah, that's it.
Yes.
There we go.
And you click that.
Right, here we go. Let's put up. Let's select this monitor here. Start screen share. I think this is the correct one. Now, at the moment I've got a euro dollar, but let's come back to some currencies later. Let's have a look at that S&P chart.
You're looking for 112 there too. Okay, it's all right. But go ahead.
Is that something that's familiar to you?
That's my target. It's what I love, Peter, is that when people that have different disciplines, I'm not an E-waver. I'm kind of a classic chartist, RSI guy. And 1273 actually comes in from the daily channel breakdown that we had. That would be a back test of the breakdown. So interesting. 1270, and that's a little bit of a change from the last time we talked. So you're allowing for one, after this C-wave rally in the euro, one more low just above parity.
Yeah, yeah. I mean, we can take a quick look. I think let me just put up. There's a slightly bigger picture here. Yeah, this is the daily where that
Okay.
shows. Now, what happened here was that actually, we're still above. We're still trading above the March low
Right.
last year, which was a significant downside target on my weekly measurements, going back to the highs in 2008.
Right.
But actually, it began to change a little bit during this decline here through October and November because, yeah, actually, it didn't break the lows, but of
Right.
course the dollar index did. It sort of, if you remember, in December, the dollar index sort of took a few pips outside and above the
Right.
March highs, and that meant it really has to. The dollar index has to trade into, and above the December high still at some point, and that sort
Okay.
of
So
tipped us off.
10250 is a long bandied about target by wave guys. So there's certain fibs up there at 10250. So if the euro's going to trade sub parity here, um, that would probably take the Dixie up towards 102.
Yeah, yeah, that's right. 102. I think there's even on a weekly chart we've got 103.77 on the
Oh,
Dixie.
oh, okay.
So it could. I think we're going to. I think we're going to get one more drop. It's quite complex, this what I've drawn here, because it's what we've got from 117.12 down to 105.24 is a three price swing event.
Hmm.
And in order to secure a major low and a directional change, we need five waves into a new low. And this is only
Okay.
three. I
Right.
mean, it's not impossible to drop down immediately and create the effect of a five-wave pattern down into a lower low from current
Okay.
levels. I actually favor it to trade up
Right.
within this range. But if it did that, it would disqualify, the next drop would have to sort of unfold into this sort of generic diagonal wedge-shaped pattern that I've drawn. That doesn't matter too much, but yeah, anywhere between 98, 102, anywhere down there, that's reversal territory on the bigger picture. So, I'm pretty confident that we're still going to get that change, but
It's
December's
interesting.
move delays it. Hmm.
It's interesting that you point that should this unfold, and I know it's not in cement, but it looks like it's April, June, and
Hmm.
lately in the market, I've noticed that a strong dollar has been constructed for the last year or so for dollar-denominated assets, including equities. So this is implying that if we do get um, a low in the S&Ps here shortly, that perhaps they rally into that, like you said, 5 6 month rally as the dollar index rallies for one more high and the euro drops for one more low. Does that fit into your puzzle at all?
Yeah, I think it does. I think that's a very viable situation. Um, yeah, I quite like the way that the currencies are setting up. We're getting a lot of inquiry from our institutional clients about the emerging market currencies at the moment. I mean, you've
Mm-hmm.
been seeing headline news since January about the renminbi, the yuan, Chinese yuan, sort of coming under further pressure against the dollar, and the attempts to try and stem the weakness of it. I think that may continue to weaken though until we get this general dollar turnaround, as you say, between maybe April and June. Around
Okay,
parity for the euro. So that's likely, but there's a couple of things which interest me. Do you ever look at the Brazilian real?
go ahead.
Well, we can have a
So
look
we
at
know
that.
that the Brazilian real has been under a lot of pressure, like all the EMs, and they're uh, a commodity-based economy. A lot of grains, a lot of mining in Brazil. I don't know. Petrobras on the verge of bankruptcy. So um,
Yeah.
interesting that you're looking for that. That kind of ties in with the dollar being close to a top too, doesn't it?
Yeah, because what interested me about this chart was that it's evolved up from 2011 in a five-wave pattern. Now, hey, look at the date here. If I put my cursor down here, can you see that?
Yes.
That's July 11. And
Right.
it's not a coincidence that we get, emerging market currencies, but we're very high at that time, and basically it's because of their commodity element. Now, of course, what other commodities topped out in 2011? Well, practically everything. I mean, we had copper in February 11.
Yes.
We had silver
Gold.
in April 11. Yeah, gold was August, September time. And
Right.
and the other date in April, which was really important, was the Emerging Market Index, the MSCI. But coming back to this Brazilian real, it obviously topped out, or the dollar bottomed equivalent to it, in July. So it's within that sort of time frame where we saw commodities roll over and move downwards. But you see, we're looking generally at commodities bottoming out pretty soon. And that seems to be typifying this five-wave evolution of movements up on the real. And we had this peak already in September last year, and it's been unable to break that. You can see that the dollar's moving up after an initial drop down. But, that, I think, could end up remaining below that peak and rolling down eventually as soon as the euro's bottomed. And that's when we get the really aggressive sort of dollar selling, and this thing starts to dive. It's not quite ready yet, but I would be watching this because it gives us a bit of an idea of where the commodities are bottoming, the timing of that, and it also tells us that, we're seeing a waning sort of effect of strength in the dollar. It's basically in the last stages, it's decelerating, even though it's still moving up generally against some currencies. Its deceleration is getting quite obvious when we make comparisons to some of these currencies too.
Okay. So the linchpin and the most important commodity based upon the junk bond market here and what's happening internationally with Saudi Arabia and what's happening with a very tight correlation of how S&Ps are trading. Every time crude fades, they sell the S&Ps. A lot of people are talking about targets that would really be amazing. You have people talking about $10 oil now, Peter, and
Yeah.
I could see maybe 25, but when you start to get these kind of numbers, people talking one handle in the crude, to me, it looks to me like we're approaching some type of low there as well. For at least rip your face off bear market rally, what's a wave count look like for you?
Well, this is a monthly chart of crude, and I tend to think that we're going to be heading into a low pretty soon now. I mean, you mentioned 25. We've got something between 25 and 27 as a downside target, so that's not very far away now. And and if I just flip to the next chart, you'll see how we derive that. We've actually taken the financial crisis sell-off for oil from 147 like this. So we measure down into this December 08 low. And we just simply subtract that same measurement from the reaction high at 114.83. And you can see that's where we derive this 25, 26 target. So it's not got very much to do. I mean, so far in January alone, just in these last 2 weeks, we've gone from what, 38, here we are, 38.40.
31.
Yesterday, 29.93. Yeah. So we dropped $8. I mean, if it drops another 3 or 4, that's less than what we've done already in the first 2 weeks. So that gives you an idea how quickly it could be attained.
Interesting.
And then I think we could be starting to look at some major event change. And what I like to do in my analysis is that I like to take something related to a particular chart, whether it be a currency, commodity, or whatever, and take something that it's positively correlated to, something that's completely not 100% correlated. So we get different patterns, but confirming the same concept. Now, what I'm going to show you next relates to crude oil because it's an energy ETF. You might be familiar with it, or at least some of your listeners will be, I'm sure. And it's called the IXC, iShares Global Energy Index.
Okay.
And it's an ETF. Now,
Right.
this has got over 200 energy companies in it, including the big guys, you know, sort of Exxon, Chevron, all those guys. But what we're looking at now is a particular event where a major low is forming. Let me just highlight my tool, writing tool.
Which also should be supportive of the market, because even though with market cap shrinking dramatically in oil issues, I think it used to be 12% of the S&P, it's still 6%.
Is it? Mm.
Yeah.
That's interesting
So,
then.
Yeah.
Yeah, that's interesting.
50%
Well,
shrinkage of 50% shrinkage of market cap during this bear market.
yeah, it's been severe, very severe. Well, I mean, if you just look at the numbers and work out the percentages, they're big, aren't they? It's halved, really. But this particular pattern here, for if anybody's listening and they're familiar with Elliott wave, they'll probably know what I'm drawing here. This is what's known as an expanding flat, one of the most common patterns that you'll see in any markets over different time intervals. It's composed of three main price swings. So first of all, you have wave A, setting the initial price extreme. And then you get B, which moves outside the price extreme briefly. We've got some measurements there, some fib ratios, which we use to measure where the reversal should occur. And then we get down in the third sequence in 5 price swings. And we've got measurements for that too. But basically, it's telling us we're coming very close to completion now, very close. The implications are huge, because what we've drawn here in red is this expanding flat. It's a counter trend pattern, which is moving within the prevailing uptrend. That means once it's completed, we're going to get, I think, something like this developing over the next 3, 4, 5 years, something like that. Maybe, yeah, something like that, which is huge.
Okay.
So we're going to go from 24 to 60. You know,
The triple. It's a triple on an ETF. That's pretty big.
Yeah, I think so. I think we're looking at. I think we're staring at that. So coming back to your remarks at the beginning, where you said, you know, some of these analysts are talking about $10 oil and you know, stock markets collapsing in a secular bear trend. I'm struggling with that too at the moment, like you.
And any update on gold with your revised look at the dollar, and the euro may make a new low and the dollar make a new high? It probably would be very bullish if that happened without gold taking out the 1050 level that you talked about, 1052. But is there a possibility of another low in gold under 1050?
Well, it might be just. By the way, the S&P future is trading at 1907 now, so we're already making 15 points.
Yeah, I'm taking it as a day trade now.
Yeah, me too.
Looks I just waited for you to come on the air. I bought it, and now I'm out. So
yeah, I can turn the lights up a bit higher now. That's great.
Yeah. So gold.
Let's have a look at gold. Yeah.
Yeah,
I've been. Yeah, it's fascinating to see gold. We put out a report every night on gold for some of our clients, and it's a bit tricky, I have to say, because actually, if we look at the slightly bigger picture first, which is basically here, this is a big wedge-shaped decline from the August 13 high. In theory, when we got down to 1046, I think we had a target just a couple of bucks above it, basis these measurements here, and we've subsequently.
That was a great call. Great call.
Yeah, it was nice. The only disappointment really was the fact that it didn't evolve up afterwards into 5 price swings, which would be a necessary outcome to really secure an uptrend. So I must admit I'm tentatively long, but not a lot long.
I got it.
The market.
So we've really, it's been kind of a corrected pattern instead of impulsive off that low, unless we get another push up towards 1140 or something like that.
Yeah, that's right. I've actually, it's about 11:20:25 I put out last night. If we were able to, it's a bit of a short-term chart actually, but where is it here? Let me just, this one here. I thought, well, We actually went into the market and bought a little bit last night, just to see. We've got a stop below 1078. We might get triggered this afternoon if the S&P continues to push up. But if we were to go into a lower low, I don't think it's going to stay long down there.
Okay.
Because
do you have a number? Do you have a number if that does unfold?
1016.
Will it stay above 1,000, or maybe cause some psychological panic and take out the big round number of 1,000?
Well, we've got a 1016 like this number shows.
Okay.
I mean, you could always trip through slightly if someone presses the panic button. You know that does occur, and you can you must always build that in as a factor. But yeah, if it does take out the lows, I would be looking to add around 1016. The most important thing probably from precious metals is that we want to, if this does make a lower low, if it does, then we want to see some divergence with some of the miners. And last time we talked together,
we had major divergence. Well, you know why? I didn't even get long the shares because I kept waiting for them to get cheaper with the last break in gold, and they never did.
Yeah, I specifically like Newmont Mining. This is it here, and I love this chart because the pattern's great. This is another expanding. This is likely to go down too much anymore, and it's just a question of getting a general turn in oil. If we can get oil down to 25.5, tick that box. Let's get most of the dollar peak out the way. These things are going to fly this year. If you're inclined to preempt a change in direction, that's okay, as long as you don't expose yourself with too much leverage. If you buy Newmont Mining a little bit now, it doesn't hurt because basically you're not really trading these leverage. I mean, so it's okay. And even if you did see...
Isn't it okay to build a position? Sometimes my best trades, Peter, happen when I'm early and in an accumulation or distribution phase of building a position that, if you hit it right on the button, great, you have a trade on, but I never go all in or all out on a position. I usually piece in, so it's actually a little bit advantageous, even though it, might cause you to say, oh, I should have waited, to have a toe in the water so you pay attention and continue to stay with the scenario, have conviction, and consider if you're buying a market and it gets cheaper and it's within your parameters, that thank you for giving me time to build a position.
Yeah, no, I think that's a great exercise. I mean, I do the same, and I think that's fine as long as you don't put yourself under psychological pressure. I mean, if you do such a thing and you're leveraging and you're sweating and not sleeping at nights, this is not good. This is definitely not good. So you have to use and then you've got to say, well, then, if I did such an exercise, I need a point where I'm wrong. Where do I decide I'm wrong and I have to close out? Where don't I sort of add to a position? Well, to a large extent, no matter what discipline you're using, there's not always a de facto level. Sometimes we have to use intuition. I would say that for those that, that do trust their intuition, use that, because that's also helpful if you're inclined to sort of average positioning like you've just described. Okay.
So you think we could wrap it up with the S&P count that you were looking at, and perhaps maybe with that show the Russell and how it all could tie together? Because, really, the FX arena, it's interesting to me, Peter. All the volatility has shifted over to equities, and really the FX markets have been quiet.
Yeah, that's right. Well, they have. It's really noticeable. I
hope the central bankers aren't going to take the game away from us and just take all the volatility out. I doubt it, because I don't have that much confidence. I think the emperor has no clothes with all these central banks. Especially China, because, I used to bring up, Peter, I want your thoughts on it, the Fed has been around since 1913. So, it's got over 100-year track record, and it's made many missteps along the way. Whereas the Chinese, are just like college students. They've been at it for 20 years, so even more likely to make mistakes than the Fed.
Yeah, I think that's true. And even when you do have experience, like the Bank of Japan, I mean, how many times before 2011 were they sort of intervening to try and weaken the yen, and failed, really? It was strengthening pre-2011 dramatically, and they were, you know, getting it wrong a lot of the time. So yeah, I think that you know, that's a condition. I personally think that the Fed will have to change tactics at some point, not quite yet. Now, this is the S&P chart that we updated and sent out to our subscribers last night, funny enough. And we said, look, this S&P, if it can hold above the August lows, it has a chance of having, you know, the rest of the year up. And we'll get up to and break the May 15 high. And the response today that we're seeing right now as we talk is fantastic to see. We actually calculated, you know, around 1887 on the cash. We got to, yeah, I think there's a brief low this morning at 78.93. You can't really notice too much on this scale, but
yeah,
it's now 1915 and it's doing very well. And I think if we can push on, it's going to all be change.
I tell you what, Peter, another great interview. I want to tell you this, and I'm not patronizing you. You're one of the best guests I've ever had. I've interviewed hundreds of people, and your style and the views that I get help me. I really encourage people to subscribe to you, because just one good idea from Peter will more than compensate for any subscription price. And I've interviewed at least 10, 15, 20 different e-waivers, and your work is top shelf, elite. And I really appreciate you coming and sharing all this for free with our community. And you've helped me with my trading from the first time that I've met you. And I want to thank you and validate the great work that you do, Peter.
Well, thanks, Dale. I mean, that's really, I can't, you know, I'm speechless basically, but I really appreciate it. I really enjoy our chats, actually. And let's hope for more in the future. Let's get together, because I really enjoy talking to you and picking through the markets. And yeah, it jives good. And I just hope that everybody listening, you know, makes good use of what we've done today.
Okay. Well, you know, I love to flaunt it, so I'll be getting this out to people, and I think that this video again is very edifying, with a lot of major events and a lot of fear and worry out there, and you know, people saying sell everything and, you know, just go to cash. And this is a much more tempered type of viewpoint for people to consider before they panic, and pointing out the great opportunities that lie ahead this year in the most depressed commodity market in my career.
Yeah, exciting stuff, really exciting stuff. So yeah, let's basically get together sometime soon, Dale. I'd really look forward to that.
Okay, well, ride the wave with Peter Goodburn at Elliott Wave _WTI. Have a great weekend, Peter. Thank you so much for being with us again today, my trading warrior brother.
Thanks a lot. Thanks, Dale. Best of luck to you.
All right.